What's going on, podcast family? Want to thank every single listener out there tuning in to the Stocks is Talking podcast with Ibn Getz. Very quick disclaimer, everyone. Please keep in mind, Ibn Getz, we are not financial advisors, people. We are simply two guys that love investing and we love to talk about it. At the end of the day, it's important to trade at your own risk. It's important to do what's best for your portfolio and always use discretion when trading in the markets. Welcome, world. Welcome. We are at episode number 2, Stocks is Talking podcast with Ibn Getz. I'm your co-host, Ibn Getz. What up?
What's going on? Episode 2, let's get it.
Episode 2, I'm excited. I hope you excited. Last week we got into a lot of heavy stock talking, actually. We talked IPOs, we talked about options. I'm feeling like I want to kind of pull it back for the people. For the beginner, someone that's never traded a stock a day in their life, but they're interested, where do you start? That's kind of what I'm feeling for this episode, at least to start with. Then we'll see what happens with it. But I definitely want to take it back a few notches. Are you okay with that?
I'm good with it.
You good with it? So let me get right into it. Volume, 52-week highs and lows. Volume, 52-week highs and lows. When you hear those terms, what are your thoughts?
Volume. When we're talking about volume, we're talking about how a stock is traded on a daily basis. You know, we're talking about how many people are in the market are, trading that stock.
Okay. So
you want to look at, what the average volume is on it, because it's going to show you, when you see these spikes in volume, or you see, the volume's really low on a day, it's going to give you an idea of what you want to do with it. How you want to trade it. Is there news? There's a bunch that goes into it. So, but volume is a tell. It's just
okay.
It's one of the tells, So
it's a tell. So when you say a tell, what you mean a tell? Something that's kind of giving you an example of what to do? Is it?
Yeah, it's like there's something going on with that stock. So if you're looking at a stock and you see a spike in the volume, all right, why is there a spike? What's going on with this stock? So maybe that's that could be one of the things that helps you in this research phase of you picking the stocks that you want to trade or invest. Probably more on a trading side if you're going to do volume. And then 52-week high. Talking about 52-week highs, lows. I mean, tell them about it. This is something that I think you could explain a lot better than me. So you get into it.
So here's what I'm thinking. When I think 52-week high, when I think 52-week low, I'm thinking a possible entry point. If it's at its 52-week high, I'm thinking I want to bounce in because now it's breached a certain level of resistance at the top. So if the stock is, let's say, $10, the 52-week high is $9.95. That tells me, this thing has now surpassed what the previous yearly high was. So now it might be on to new pastures. So I'm going to consider buying it. It doesn't mean it's a definite buy. It means that's a strong indicator. An indicator is a good word. We threw out a couple terminologies for you. We threw out 52-week highs and lows. We threw out volume. Indicator is a huge tell when it comes to the stocks because indicators can be a bevy of things. It can be the volume of a stock. It can be the 52-week high or low of a stock. Indicators help give the investor knowledge that will push them forward to a decision. That'll either support their claim or resist their claim. If you're thinking, hey, I want to buy a stock because I think it's going to go up, and you have indicators that are telling you, there's low volume. Right now, the stock, it just breached its 52-week low, which means it might drop lower than that price point. That's telling you, it's not a good time to buy, potentially. It's a time to wait and see because it's surpassed the previous low. These are indicators, people. Indicators what make intelligent traders and not so intelligent traders. The difference between the smart money and the dumb money, and if you don't know what I'm talking about, check out episode 1, where Getz got into smart money, the investors, quote unquote, the institutional investors, excuse me, and then your dumb money, which is the retail investors, the little guys, the Ibs and the Getzes, and all the other small people. And again, like I said, we're here to break that stigma, because we're the smart money as well. Why are we the smart money? Because we have indicators like the 52-week high or low, like volume. Now, when it comes to volume, and you touched on some great points, Getz, you jumped out there with a few keynotes that I actually wanted to bring up, but you took them from me, so I appreciate that. One thing I wanted to talk about was volatility. Volatility, is when a stock is trading all over the place in one day. Are you familiar with volatility, Getz?
I am very familiar.
And not to stray off path, but Tesla is one of the biggest volatile stocks, because they will go from $700 to $634 in 20 seconds. And that's not a joke, people. This stock will move quickly because it's high volatility. Volume encourages volatility.
Right.
Tesla has a high volume, right, Getz?
It does.
On a consistent basis. When I say high volume, I'm talking in the millions. Every day, people are trading Tesla back and forth. These are just facts. That volume indicates there are millions of people every single day trading the hands of the Tesla stock. Because there are so many millions of people trading hands, this stock is now highly volatile in terms of it will jump up, it will jump down quickly, and I'm just going to throw this nugget out there. The news will affect a volatile stock very quickly. Unlike a stock that has low volume, there aren't a lot of people buying and selling, so news isn't going to make a big deal. A stock like Tesla, if there's news that a Tesla car malfunctioned, that news is going to make the stock move because it's highly volatile. Now, a company you've never heard of that's at $4 a share and nobody knows about it could have some crazy news that came out because there's already low volume in the stock. You're not going to see much movement. If they report good earnings for a day, you might not see huge movements because there's low volume for the stock. Now, if some breakthrough happens and this health company now has a COVID cure, that stock that was $5 may become very volatile because millions of people may want to go in and buy this company that they just heard President Biden talk about. Does that make sense, Getz? Or am I going too far into the weeds right now?
No. It makes a lot of sense. You know, and we got a few other things we probably want to cover. You know, so
here's my point, though, Getz. My point is, we're here to not just chit chat about what we're doing. We're here to give some knowledge for the small time investor to become the smart money investor.
Right.
And we have our ups and our downs, but we take the knowledge we've learned to try to increase our wins and minimize our losses.
Risk management.
Another thing, risk management is so key. Not to get too off topic, risk management is everything, because you don't want to become an emotional trader because your risk management goes out the window. Guess what do I mean when I say emotional trader? Ask me what I mean by that.
You tell me, what do you mean by emotional trader? What is risk management?
Hey, guys, thank you for asking that. Now, when it comes to risk management and emotional trading, as I just mentioned, risk management goes way out the window because risk management is minimizing your losses. Let's say you jumped into a stock. It's now dropped down $2 or $3 since you bought it. You're losing some money. You don't see any positive news coming out. You want to cut your losses. You want to sell that trade. Hold on to some of your principal, which is the initial money you put down, and go look for that winning stock. That's called risk management. However, when you become an emotional trader, you make a trade and say, you know what? I've been watching this stock and Cousin Billy told me it's going to take off. I buy it. It's now dropped $5. But you know what? Cousin Billy told me about this. He's never wrong. I know it's going to work out. There's no news coming out about the stock. They're not doing any new innovations, which we talked about in episode 1. Nothing is coming out about the stock. However, it continues to plummet. It's now dropped $10. But you say, no, it's going to come back. And next thing you know, 2 weeks later, your account is blown up, meaning your account now has a zero balance because you stayed into a stock too long when the indicators told you to get out a long time ago. But if you're an emotional trader that goes off of what Cousin Billy said and not what the indicators tell you, you will blow up your account every time.
Now,
every single time.
Now, what do you do for your risk management? How do you plan your trades?
So how I plan currently, I'm setting stop losses. We're getting a little advanced, but you asked me a question and I'm going to answer it truthfully and honestly. I set stop losses, meaning that if a stock that I just bought drops to, let's say it drops $2.30 from when I bought it, my trade is automatically going to sell for me because I put in a stop loss, meaning I want to get out if it hits this point. So that's my biggest risk management position right now because I can save myself, Glitz. I can save myself from myself because I have been that emotional investor that says, you know what? No, I've heard nothing but good things about this stock. It's going to go up. I saw that it went up a month ago and Cousin Billy made $300. So, I know I'm losing right now, but it'll come back. The next thing I know, it doesn't come back. Now I've learned through training and life experiences, my best risk management is to put the stop loss in right when I execute the trade. And you can execute a trade and set a stop loss at the same time. So now I know I've set my stop loss at a price I'm willing to lose. I'm willing to lose $200 on this trade. I won't be too upset. Now that emotional trader, that same $200 you could have lost, you've now lost $600 because you were banking on what Cousin Billy did a month ago. And you refused to pay attention to the indicators. Sorry to go back, but let me bring it back to your point. My risk management, I'm setting stop losses. Now, that's something we'll get into in the future. I promise you, audience, we are not trying to bore you with these nuanced terms, but we're going to slowly guide you there to the point where you're going to be telling your friends about the stop loss you just set for your stock. Now, so we'll get there. We'll get there, guys. Go for it.
Right. Now, the one thing I want to say, just to kind of segue back into the research, we bring up all these terms, and if you want to bring it back to the research point of it, you have all these resources available to you, and we'll get into it a little bit. But one of the greatest resources, just to teach you the terminology and teach you what these things are we're talking about, is Investopedia.
Oh, you took it to Investo? Yeah, I just coined that term, Investo. that's my biggest. That's my man right there.
Yeah.
But go for it. I don't want to cut in.
Yeah. It's where you want to. It's a way to begin your journey. You can get on there. You can learn all the terminology that we're using, and then you can put it from there, because you could go to all these other platforms to do your research, and you may hear some of these terms, but if you don't understand them, then it means nothing.
Nothing. You're absolutely right. Investo is one of those. It's one of those ones I always go back to when I'm reading an article and I see a term in a Wall Street Journal. Like, okay, you got me right there, but let me go back to Investo and see what it means. So now when I see that term again, I'm familiar with it. I'm now following the lingo.
Right.
But go for it.
So
what else we got for them?
Well, now that you're in Investopedia, you're learning all your terms. Now, lately you've been hitting me with a lot of different places to get your research from. I think you should dig into a little bit of some of the places, that some of the things you found as far as for research.
So here's what I'm doing. First and foremost, I'm going to Yahoo Finance. Yahoo Finance is where I'm going. Is to see if there's any major news. I'm kind of looking like headline news. I'm going to Yahoo Finance. Yahoo Finance is where I check for my 52-week highs. and for my volume. It's a great resource to use, but it's only one of many. As Getz mentioned, I'm also using Finviz. That's FINVIZ.com. Hey, Getz, I know this is the first episode, but all these companies we're name dropping in the future, please feel free to become primary sponsors of the Stocks is Talking podcast with Ibn Getz. Investopedia, we'd love to have you. Yahoo Finance, we'd love to have you. Finviz, we'd love to have you. But Finviz, what I like about them, they will break up the stock market into segments. So if you're like, hey, it looks like technology is kind of booming right now, I'd love to buy a stock in technology. Well, you go on to Finviz and it will break down sectors for you. So if you're interested in technology stocks, it will be grouped separately of all the technology stocks. And then you can break those stocks down into subsectors. If you're interested in pharmaceuticals, because right now, COVID is the biggest news grabber right now, especially here in the US. I know we have listeners all over the world, but here in the US, COVID is still a thing. So any pharmaceutical company that's coming up with new COVID vaccine trials or anything related to COVID, they're kind of sizzling potentially. So you might think, hey, what are the pharmaceuticals doing? What are there some good companies that are in the green right now? In the green meaning they're going up. Let me check one. Let me see if there's a stock that's at $3 currently, but they're working on a phase 2 trial of some COVID vaccine, and now they're waiting for FDA approval. At that point, that's when you buy the rumor, because the rumor is that they're waiting for FDA approval, or it's a fact because they are waiting for it, but the rumor comes in terms of if they end up approving that stock, the FDA, now that stock is going to go up. It's going to take off, and what do you want to do, Getz? You want to sell the news. Because as you mentioned in episode 1, buy the rumor. The rumor is this new company is working on a trial vaccine that might get FDA approval. The news is new pharmaceutical company just received FDA approval. That's when you want to sell, according to the analogy, buying the rumor, sell the news. That's a perfect example of it. So my point is, with Finviz, you can break your research down into sectors that you think are cool stocks. If it's electronic vehicles you're interested in, that's the new booming thing, Finviz will break that into a sector. So do you see the value in that, Getz? Because that's something that I'm using on the consistent. Have you tried it yet?
I have, and you know what? One thing you didn't mention about something like Finviz, and there's a few other that do it as well, is the screeners.
Ooh.
You know, and when you get a little more advanced and you learn the terminology and everything, and you go into these sites and you have these screeners you could set up to only look for exactly whether it's your volume or your 52-week highs, your volatility.
Okay.
You know, the trend of the stock.
The trend.
You know,
when you say the trend, what we mean?
We're talking about whether it's trending up, whether the stock is green, it's going up higher, or it's trending down. If it's selling off, you know, the price is going lower. You know, you can set all these things. You know, when you go to these places like Finviz, and there's a few others. You know. And
here's why we're telling you. I'm sorry, go for it, Getz. I don't want to cut you off. A lot of the listeners said I cut you off too much in the first episode. So I'm trying to pull back, people. I heard you. I'm listening. I hear what you say. I'm bringing it back. So I hate to cut you off. Please continue your point.
No, you just say you have these tools in front of you. You set it up. You set it how you want it, and you can just go from there. And it narrows the scope. You know, so instead of you looking at the whole broader market, you narrow it down, and it makes it easier for you to go after exactly what you're looking for.
So you're becoming a sniper in the market. You're pinpointing exactly what your target is because you have indicators and research at your side and at your sites. And that right there is invaluable for a beginner trader that wants to make some money in the markets, or at least get your feet wet. Because please understand, we all lose money, we all make money. I've been there, Getz, I know you've been there. And we're going to get into those stories of how we lost. I think we talked about the Facebook IPO last week. We bought in and it dropped immediately. And we sold at a loss. These things happen, but the more indicators you have available to you, You become a sniper because you get to narrow the scope. And Gets, you said it perfectly. That might be the title for this episode, people. Narrow the scope. That's what we're teaching you to do. Please, do you have anything more? Because I'm turned up,
That's
as
it.
you see on this pod. I'm ready to
Yeah.
drop everything I know in one episode and say that's it for the podcast.
Yeah, no, I want to hear what you got to say.
So here's the next thing. And I'm not going to say the next thing. Here's just the important piece of why we're saying this to you. Do not jump out there and buy a stock simply because you heard Cousin Billy say buy the stock. Do your due diligence. Take the time to research. Take the time to understand why the stock is going up. Does this have unusually high volume? Because unusually high volume usually means something's going on here. News that just kicked off. Because do I want to sell here or do I want to buy here? Again, buy the rumor, sell the news. So if it's news coming out, that's why the stock is volatile. That's why there's high volume. The whole point is understanding these terms, understanding what high volume is, understanding what volatility is, understanding what 52 weeks highs and lows are, and saying, okay, I have these indicators by my side, a toolkit that I can now sit down, get in front of my laptop or my mobile device and say, I'm going to invest, but I'm going to invest the way the smart money, i.e. the institutional investors, execute their trades. And I think that's the main thing we want to do, guys. At the end of the day, we started this podcast because we talk every day. We talk wins and losses, strategies, research, different websites. These sites we're bringing up to you, we've brought up in conversations because we come across them and say, hey, have you seen this one? I saw how you can now break down the stock research into screeners. I can now look at different indexes. I can now look at different sectors in the market using this site, using this tool. So we just want to bring it all to you people, all for the sake of increasing your knowledge, helping you make intelligent, sound decisions. We're going to take a quick pause for the cause, pay some bills, i.e. ads are coming, listen up. Today's episode is brought to you by PT Solutions. PT Solutions is a business consulting firm offering innovative solutions to help strengthen your business. Now, what does that mean? It means infrastructure. It means support. It means coaching. It means development. It means advertisement. It means ensuring that your company gets to where the money resides. Contact PT Solutions today to get started. www.dcbizpros.com. Because for me, I feel like it's about time the smart investor becomes the masses. That's my whole point. That's kind of why I do it, Gets. That's why I'm here. I want to bring this information to everyone. And I'm constantly learning, which is the beauty about education and research. It's an evolving thing. It's evolving, but you start from the basics.
Right.
What we're doing now is the basics. Jump on in.
Yeah, it's about investing in yourself. You know, what do we always
We
talk
need
about?
some of those horns. I wish I had the horns right now to blast in. Invest in yourself, people.
Yeah.
Invest in yourself.
We always talk about beating the bank. You know, the bank is paying you 0.01. I mean, if you're lucky, maybe you get a bank that pays you 0.4. You want to beat the bank and you want to invest in yourself, because with inflation, you're losing. You got your savings account, you're losing.
Every time.
Oh yeah, your money is losing value. What it buys you is less and less every day, So you invest in yourself first. And that's the point of what we're doing here. And it's not just about stocks. We're also talking, what we're about is just investing, period. People think investing, they think it's the stock market, but it's equities, it's real estate, it's cryptos, it's, You know,
Forex. It's
Forex.
limitless. It's owning businesses. It's buying and selling businesses. I mean,
Right.
It's so much more to it that we're definitely going to touch on. Please continue.
Yeah, it's just again, all of that is investing in yourself. That's all it comes down to. Pay yourself first. You know,
pay yourself first. Did you ever read The Richest Man in Babylon?
Yes, The Richest Man in Babylon, Rich Dad, Poor Dad. All these are all, you know, we just talking about research. I mean,
pay yourself first.
Yeah,
pay yourself first.
Open your mind. You know, but let's get back on topic. Let's get into, you know, how do you invest in the equities market, in the stock market? Let's get into it.
How do you invest in the stock market is probably one of those key, what is that, like those keywords on Google? That's got to be a key phrase. How do you invest? How do you invest starts with the research. It also starts with the literal how-to. What platform can I use to invest? Do I just jump on Google and tell it to invest for me? No, there are platforms to use. Charles Schwab is one that I use, guys. I've been using them for years. Charles Schwab, the Stocks is Talking podcast with Ibn Getz just shouted you out. Sponsorship is available. Come talk to us. Come talk to us. However, I've been using Charles Schwab for years. I was using them back when they were Options Express. This is not to hype or tout this company. This is what I use. We're a very realistic podcast. We talk about real life. So for me, I trade using Charles Schwab. So this platform allows me to trade stocks, meaning I can buy the stock, I can sell the stock. It also allows me to trade options, meaning I can buy a call option that the price is going to go up on the stock, or a put option, meaning the price is going to go down in the stock. So I'm able to do stock trading and options trading with my Charles Schwab account. That's what I use. I'm not going to lie, I started using Robinhood. This was I'm not going to say per Getz's suggestion, but he brought it up to me. He was using it before me. Robinhood, feel free to reach out to the Stocks is Talking podcast with Ibn Getz. We're taking sponsors as we speak. You talk on Robinhood a bit because I know you put me onto them.
Yeah, I mean, Robinhood was an innovator, which we got into in the last episode. You know,
innovator.
Yeah, you know, when we were starting out trading, there were all these fees, you know, so you'd pay a flat fee and then you'd pay a fee per share, and all these fees would add up. So you had to add that to your cost average, you know, when you were buying and selling. When Robinhood came into the game, Robinhood eliminated all of that. So, you know, if you just forget about the controversy of late of how they make their money.
I promise you, I was about to burst this whole Robinhood bubble address the controversy, but you jumped in there. Go for it.
Yeah, no, let's forget about that for a second, right? On the consumer side, Robinhood is free. So Robinhood changed the game in that manner where everybody else kind of had to follow suit. Where now, how can you compete if the next guy is free? You know, if I buy 100 shares on Robinhood and it costs me nothing but what the shares cost, but then if I go to another broker and they charge me $5, you know, flat fee plus, you know, 35 cents per share, and I'm buying, you know, 100 shares. So you're talking
hitting you.
Yeah.
They're hitting you over the head.
Right. So now you got to add that in to what it's costing you.
You have to add that into your price point and your sell point.
Right. So you're talking, you know, what, $40 each way. So that's an extra $80 that you need to account for at the end of the day when you do decide to sell. Robinhood eliminated all of that, you know, and there's, you know, regulators and everybody could say what they want about it. It's gamified or this or that, but they made it very simple. They made it very cheap to do what we do. Now,
it's seamless. It's a very seamless process. When I signed up for it, and I just signed up a couple months ago, I signed up and made a trade in Robinhood the same night, like quickly.
Right.
That I'm not gonna lie, I did like that because that was, again, in this new age of I want it now. I'm the same. I want it now. And Robinhood, I like the fact that let me sign up. Oh wow, I just placed a trade. And I bought a Bitcoin, which Charles Schwab does not allow you to purchase Bitcoin. Not to get too ahead of ourselves, but of course everyone knows about crypto. So I didn't buy Bitcoin. I bought, I think, Ethereum or one of those other cryptos, but I used Robinhood. I jumped in on Robinhood specifically because they allowed me to make crypto purchases, and Charles Schwab does not. Or at least I don't know how to do it on Charles Schwab. I don't think that's a function they allowed just yet. But Robinhood did. They were seamless. I hate to cut you off. I just had to jump in there to let people know that it is seamless, and your whole purpose of innovation when it comes to the seamlessness is key.
Right.
And that's what enticed me.
Right. And so you look at these brokers. So you have the old guard and the new guard, and and Robinhood is part of that new guard. They're the innovator who changed the game. So you talk about Schwab and Options Express, which I used them back when they were Options Express. I walked away once Schwab acquired them. But part of that old guard, you have your TD Ameritrade, your E-Trade, TD Ameritrade, who also has the Thinkorswim platform. And
what's that all about? What's Thinkorswim?
It goes back to the research. You have TD Ameritrade is your broker, and you can go and you do your buys and your sells, and it's not much to it. But when you get into
all the functions you need,
right? When you get into the Thinkorswim platform, now they have the research tools built in, so you don't have to go outside of the platform. They want you. They have they have these lessons every day, and there's the indicators, and they have all these tools there available to you.
They have charts. Then you can use the demo accounts on there that allow you to put $50 into this account, and you can now place trades, but it's all virtual money.
Right, paper trading.
And paper trading, which we used to love. And I hate to go off topic, but we got to give some stories. Paper trading for me gets, and I think for you as well, I take that just as serious as if I'm trading with 1,000 of my hard-earned money.
Mm-hmm.
Like my paper trade, every trade I make, I want to put the same amount of research, and I'm hoping that trade does what I want it to do, even though it's not my money. And that's another key for an investor. If you're serious, do the research, create a demo account so that you can start placing some trades without using actual money. Get familiar and comfortable in your strategy, and now take your account. Say that again?
And your platform.
And your platform. Get familiar with your platform. Eventually we're going to get the horns. So when we give you something really good, I'm having a sound effect, because that was another sound effect worthy statement. Get familiar with the platform, because if you're not familiar with the platform you're using, how are you going to make sound trades?
Right.
At an efficient pace.
Yeah, a lot of these platforms don't make it easy.
Facts. Big facts, which I don't understand.
It makes no sense.
But they do it all the time, and I think it's important for us as investors, as people that are interested in the market, we're constantly testing out other platforms to see if they're worthy of actually trading on.
Right.
I think you mentioned you were trying something new recently.
Yeah. I'm constantly looking into new platforms, and there's a lot of new ones. You have we talked about the Robinhood being a new guard and innovator. And then Webull is blown up. So a lot of people are going to Webull, and Webull kind of is a mix of the two. Where you get kind of the old guard feel, where you get the charting and the indicators and things, and you get the free trading and some of that stuff like Robinhood. But then there's also some other platforms like the Public and SoFi that a lot of people are talking about. You know,
Public and SoFi. What's up with them?
I see those two I haven't tried yet. I've been hearing about them. SoFi I want to try because SoFi I'm hearing the big thing that I'm hearing about that makes me want to try them is I hear that they're going to allow individual investors, retail investors, to invest in pre-IPO.
Ooh, that's a game changer that I was not aware of until this moment.
Yeah, and
that's big, Gets.
Yeah, that's a big deal. You know.
Huh.
So that's
who's doing that?
That's SoFi.
SoFi.
Yeah, SoFi, which actually just went public. You know, and then there's another one called Public. I haven't tried, but Public, which I'm thinking we might have to try Public because Public has a feature where you can actually they treat it like social media, so you can follow other traders. So we could have a trading account for Stocks is Talking, and then we could have the people who listen follow us, and we can follow them, and we can all see what each other are doing, and learn from each other. They have a social media aspect to it, so that's something that I definitely want to try out. There's another platform that I just heard about, I'm looking into, and I won't go into that one right now, but
we're not shouting them out because they're not ready to be a sponsor. So you're not ready to get shouted out on this podcast. Yeah, and all jokes, just playing. Keep going.
Yeah, but they're supposed to be a little more advanced. But I gotta actually see for myself what it's all about. But one of the big ones, one of the old guards, another old guard is E-Trade, which I don't really know too much about. But E-Trade is kind of on the same level as TD Ameritrade. With their basic level of trading, and then their advanced, like the TD Ameritrade Think or Swim, where you can get more into the charting and things like that. One of the big ones that I've been talking to you about is I've been talking to you about M1.
Yes, which I still have not checked out.
Yeah, and my big thing with M1, and everybody do your due diligence, and you gotta try before you buy. You see what works for you, but if you listen to some of these institutional investors and things like that, they'll tell you, don't buy individual stocks, just buy into funds, or buy these like
ETFs
these,
almost.
Yeah, these ETFs. But my thing
now, an ETF. Well, go finish your point, and then I just want to touch on that.
Your exchange traded fund. I'll let you get into that. But my thing with M1, and this is actually something that I challenged myself to do, was everybody has their, if you're working your full-time job and you got your retirement, you got your 401k or your IRA, whatever it may be, you have it's somebody else is managing your money. Something I challenged myself to do was I need to see what they're doing, and instead of changing the allocation so that I can actively manage it, I want to see if I can beat them.
Ooh.
So with M1, you can make your own fund. You can pick your stocks, add it to a basket. You choose your allocation for each stock, right? And you choose how much you want to invest on a weekly basis, monthly basis, whatever it may be. But it's basically having your fund, your ETF that you're managing actively, and you do what you want with it. If you want to take a stock out of that basket, you take it out. If you want to add it to it, if you want to rebalance it, if you have a stock that's skyrocketing, and now you want to, it's supposed to be 5% of your account, but now it's 10% of your account because it's just gone up so high, you can rebalance it, so it would sell off some of that, and even the playing field, M1, that I think that's a big deal because you get into that, and I think this is something we need to talk about later in this pod, is for the people who want to be the investor,
I have to jump in because I appreciate the fact that you're giving the listeners some good game, introducing them to a new platform that allows them to do some pretty intricate things when it comes to the market. However, I'm upset. You want to know why?
Why?
I'm upset because you never told me about this function of M1 where you can pretty much create your own fund and invest little by little into the stocks of your choosing, almost as if it's your own little 401k. You know, I'm a full-time businessman, so why have you not mentioned this to me? Because I'm ready to create one right now.
Yeah.
How am I just hearing about this on the podcast?
Yeah, did I not mention or did you not listen?
Ooh. Don't do me like that, Jets. Did you mention this before?
I did.
Oh wow. Well, people, I'm a man, and first and foremost, I always am comfortable admitting when I'm wrong. Guess I was wrong. I was wrong for not listening or paying attention initially, and I was wrong for bringing it up and calling you out, because then it led to me getting called out on national podcast radio, which I just created that. I don't even know if that's a thing, but I like how that sounds. So nobody steal that from me. I might look to create that LLC, but
we'll call the lawyers. We get it trademarked. Don't worry about it.
Yeah, we'll get it all taken care of. But M1, and again, M1, the Stocks is Talking podcast with Ibn Getz. Come be a sponsor. We shouted you out multiple times, but I'm, like, no lie, interested in this functionality, and I'm not sure why I never paid attention before. But I think that's great for the big time investor, the small time investor, somebody like me who you're fully business. You don't work a 9 to 5, so you don't get the perks of a 401k, all these different things that kind of secure you for the future. Something like this, where I'm always looking to add to some mutual funds or some dividend plays that are going to pay me long term. Hearing something like this, like, yeah, I'm going to do this week. And this is not even talk for the podcast, but I think that's the beauty of this podcast, is that not only are we teaching the listener and giving you all some good game, we're giving each other game. And Getz, apparently he mentioned this to me before, and I never paid attention to it. I'm horrible with text messages, as you know, cuz I'm horrible with reading things when people send it to me, but I try my best. But yeah, I clearly missed the memo on this one, but I'm jumping in because it's honestly valuable. And again, this isn't podcast talk. This is realistic life. I guess I need to do something like this where it just allocates a little by little every single month, and I don't have to pay attention to it, because that's the beauty of it. If you do your due diligence, if you do your research, if you follow the indicators, jump on Investopedia to learn some more terminology and put some indicators into play, you can easily create one of these little, I don't even know what to call it. I don't know what the word is for it.
It's a pie. You make your pie.
You can make your pie off of reasonable, sound research and decision making, because you have the indicators at your side.
Mm-hmm.
So, I mean, yeah, I think you just taught me something, and I'm going to look into that definitely this week, because that's huge. I'm surprised that's not getting more attention off of that coming. And I'm not going to mention that company's name again, because no lie, they're not a sponsor, and they should be. So we're not going to mention that company's name again. But if you've been listening to the episode, you know the company, and they're doing some cool things with allowing you to purchase into stocks little by little on a monthly basis, stocks of your choosing. So I'm going to jump in on them. Any other ones?
I don't have any other ones I can think of right now. You know what I will mention this. I have it's not a broker, but there's something new that came up the other day. Is actually a Greenlight. There's a
Greenlight.
Yeah, it's a company that gives you give debit cards to your kids and everything, and you kind of control it. But one thing that I like that they did is they have a feature where you can allow your children to invest. When you have some controls over everything, but where their money goes and everything like that. But the fact that they're getting the kids into it now. One thing that we never had is financial education in schools. So
absolutely.
So and it's one of the most important things that we should have. So for a company to say now that these kids should have it and to offer it, obviously they have a financial incentive, but regardless of that, just the fact that it even came up is a big deal for me. because that's something that I've done with my kids is we talked about investing. Some of them have tried it out, some of them like them, some of them don't, but they should know about it. They should have financial education. This country would be in such a better place if there was financial education in schools.
And if it was all around,
right,
in terms of every population, every demographic had access to that kind of education.
Right.
That's the key. Right. But something like this company, what was the name again? And I promise you, audience, we're not sponsors, or the company is not sponsoring us. But I'm interested. What was the name of that company?
That one was Green.
That is providing it.
Green Light.
Green Light. Okay.
Yeah.
No, that's good stuff. That's good stuff. I actually applaud them, and I like the fact that we're offering just good game and research available not just for the beginning investor or the intermediate investor or the advanced investor, because FinViz can give you some very advanced stuff, and also bar charts when you're looking into the technicals and the indicators when it comes to charts and candlesticks, and that's a whole nother hemisphere that we'll get into down the line.
Right.
But bar chart is great for that.
Right.
But the point is, having all of these accessible to you make a huge difference.
Now, one thing I will say, we got into the research, we got into the brokers. Now, obviously, we should be starting at a young age with the financial education and everything. And in the beginning, even without all of the indicators, if we just have, if we have we have these brokers that actually promote just investing, not trading, but investing, and we'll get into the difference. But if you have these brokers that just deal with investing, and even without all of that, even if the only thing that you do is just go onto Google, very simple to do, and you put in the name of your company, whatever company you're interested in, and then at the end of it, you put IR for investor relations. And then
Hold on. Bring it back. And I wish we had the sound effects for this. Are you saying if you, and I'm not trying to hype it because I'm not familiar with this, you can go to Google, tap in Snapchat, and then IR at the end of it, and it's now going to give you investment related news on that
So
side?
what it's going to do is going to bring you to the page of that company, or most likely it should bring you to it. It'll bring it up in the search results. It'll bring you to the page of that company that is just dedicated to investor relations. So you can go onto that page and you can see the earnings reports. You may be able to listen to the earnings calls. You may be able to see if they've been selling, if they're selling debt, if they're offering bonds, or if they're having a share offering, a secondary share offering, because they're already public, right? So they've already had the initial public offering. So now if they're offering more shares, all those things can be found in their investor relations, which saves you the step of what we talked about on the first episode, where what I do, going through the SEC and getting all of these filings. You can go directly to that company and find out from that company what they're doing. So
that's crucial. That's crucial because there's so many people out here that don't know where to start. That's a starting point. Just type it in Google and type IR after the name. Once you, and if you can do that, you're off to a great start. Because a lot of people won't take the time and energy to do that.
Right.
But if you're able to take the time to type it in, type IR after it, hit enter, and now read through that report, you're ready to become a smart money investor down the line. If you stick with the Stocks is Talking podcast with Ibn Getz. Right now we're dropping jewels, gems, nuggets, however you want to call it, however you want to highlight it. Getz, you've been on fire. I don't know what you ate this weekend that had you full of this kind of information, but I didn't come prepared. I clearly wasn't ready for the level of education you had going, but I'm still here. I'm holding my own. I'm holding my own, and I think we're allowing people to get familiar with us as traders. We're allowing people to understand what research tools and websites they should get familiar with when it comes to trading. And I think after that, you need to get familiar with what is your trading style. Today's episode is brought to you by Nice Touch Editing Services. Nice Touch Editing is your one-stop shop solution for all of your content writing and editing needs. Whether you're an author looking for an editor for your book manuscript, you need a resume and cover letter to go after that new job opportunity, or if you're a small business looking to go after that latest government contract, Nice Touch Editing is the premier writing and editing solution. Feel free to reach out. www.nicetouchediting.com. Nice Touch Editing Services. Now that's a nice touch. You know, the way I see it, getting familiar with your trading style and who you are as a trader is almost as important as the research you put into it, as the platform you use to exercise your trades. Because if you don't know who you are as a trader, the kind of investor you are, that means you're any kind of investor. Meaning you'll do anything. You'll do what Cousin Billy said, what Auntie Renee said, and what your brother said. And you'll just do all those things and hope one of them lands. We don't want to do that. I understand who I am as a trader. Getz, I know you understand who you are as a trader, and I understand who you are as a trader as well. For me, I'm somebody that I want to pay attention to what's going on in the world. I want to pay attention to what's going on as far as trends and what's going on in terms of the industries that are leading the trends. So and I'm somebody that likes to float and make things based off the impact of the current standing of the world and how things are going. Let me bring it back and tell you exactly what I mean. When COVID hit, you know what I did, Getz? And I touched on this in the first podcast. I bought all the travel stocks I could think of because I knew everybody was going to stop traveling. So that means I can buy while these things are low, and eventually they'll grow into something. I'm a growth investor. I don't mind investing into something and holding it for 2 or 3 years. Some people like to get in and out of a trade. They're called day traders.
Mm-hmm.
Touch on day traders. Would you consider yourself a day trader or somebody that likes to go in for the long haul?
You know, I have been a day trader for the majority of my time in this market.
Okay.
You know, and we touched on it last time. That was my thing. I love day trading.
Mm.
With growth, you learn, and I've learned to invest as well. I still love day trading, and you don't have to pigeonhole yourself. You could do more than one thing, but you need to know who you are first.
Absolutely.
If you're just jumping around doing everything, you'll never be good at anything.
Ooh. Say that to him again. What was that?
Yeah, if you jump around doing everything, you'll never be good at anything.
Put that on a T-shirt, Getz.
Right? You know, it'll be in the merch store.
Hey, merch store coming soon.
Yeah,
merch store coming soon.
You know,
okay.
but you know, we've gone through the research. We've talked about brokers, and as you go through these brokers, and there's nothing wrong with having, 2 different brokers, 3 different brokers, 4. I have a multitude of brokers. There's nothing wrong with that. They all serve a purpose. You find what works for you in your trading style. If you just want to invest, if you're just playing it safe, then maybe you go with M1. Maybe you go one of the old guards of Schwab or TD, and you just buy your ETFs or your index funds or whatever it may be. You want to day trade, then maybe you'll go with some of these other platforms that are out here. You know,
Because Robinhood and M1, they're not ones for the day traders that are doing options.
I'm not. As far as day trader, I wouldn't do it. If I wanted to invest, yeah. I mean, Robinhood, in concert with other platforms for doing your research, and especially having live data. That's the big thing. I don't trust Robinhood's live data. I believe there's a delay to it. So if you have live data, which some people charge for, but let's say you have, one thing I've done is I would get my live data from Thinkorswim, which is part of TD Ameritrade. I get my live data from them. I can read all my charts, but maybe I make the trade on Robinhood because it's cheaper.
Nugget. So you're making it all work for you. You're taking
Right.
all the information and then using the right platforms, tools, and systems to narrow your search and narrow your execution.
Yeah, because you have a cost basis. So if you even now in the era of free trading, a lot of these old guards still have fees. So if you go to the TD, the E-Trade, all these, maybe they still charge you something. It might be pennies on a dollar. They still charge you something, and it may add up. So if I can still go to them because I have an account, there's still some cash there. I can still go in there and I can use the research platforms that they have available to me as a customer. But then I can go over to Robinhood that says we'll charge you nothing and actually just make my trade. And Robinhood charges me nothing, or they charge me, 10,000th of a penny or whatever it is. It's something so negligible that you never notice it.
Exactly.
So it lowers your cost basis by so much. So it makes your trade.
That is such an awesome business model, because those fractions of a penny add up.
They add up.
It's a great business model because it works on both ends. It works for the consumer. It works for the company who's trying to set their footing in an industry that has a lot of the old guard that are already kind of have their foot implanted into the game. They say, okay, well, we'll just charge you a fraction of a penny. So now everybody will flock over to that because I don't notice that fraction of a penny.
Right.
But the company does.
Yeah, and honestly, I don't think the fraction of a penny, whatever it is, I forget the exact number, but I don't even think it goes to them.
Really?
I think those are regulatory fees that they have to charge. I was actually reading about it the other day. I believe those regulatory fees. So they have these fees that they have to charge you, and they make their money other ways, which caused all the controversy around them. But whatever.
Okay.
But I don't care about how they make their money because I did all my due diligence somewhere else. I'm taking advantage of the fact that they're not charging me.
That's key. That's key. So it's understanding I may not necessarily agree with a certain business practice, but because I've leveraged all these other tools and you have this one specific thing I can't take advantage of, I'm going to go on and jump in and use it. That makes sense.
Right.
It makes sense. And I think that's another key for everything we've talked about on this podcast. Everything we've talked about all comes down to sound decision making. Right. And when you're able to make sound decisions, you're able to then become what? A smart money investor at some point or another. Even if you're taking losses, but you're now exercising a certain level of risk management. A key from earlier, please tune into the earlier portion of the episode where we touch on risk management. But even in exercising risk management and you take a loss, you're still playing as the smart money investor because you're putting a cap on those losses. You're not losing your entire account. Go for it.
Nobody wins 100% of the time.
Nobody wins 100% of the time. Period. I mean, I think that goes for Warren Buffett. The biggest of investors they lose money. But the key to them being the smart investor or the smart money, they make more than they lose. And at the end of the day, this is a nugget that my father always hits me with. Let your runners run and cut your losses short. And I definitely modified that in my own way. But let your runners run. If you have a stock that is taking off, it's well beyond its 52-week high, and there's nothing but good news going on, don't necessarily jump out of it because you're so excited you're making so much money. No, let your runners run. And what you can do is then set a trailing stop. And this is advanced, but I got to give them a little something because you want your runners to run. You can then set a trailing stop. So now you've told your platform that you use, hey, pull me out of this stock if it hits this number. But that number you set is already in profit. And then you set a trailing. So as the stock goes up, that number that you set it to take you out at goes up a little bit higher with the stock movement. So now as that stock runs, you're continuing to lock in more profit and more profit. You're allowing your runners to run and you're cutting your losses short. If you see a stock that just it's getting pummeled by the bad news and it does not look like it's turning around anytime soon, and all of your indicators are telling you you need to get out, then you need to get out. You cannot be an emotional trader.
And that applies to investors or day traders.
And when you say investors, those are people that are holding for the long term, and the day traders that are just getting in and out in a day or two.
Right. You have your day traders, and you could be, intraday, where you're in and out same day, and there's rules and regulations to that. They have the PDT, pattern day trade rule, where you could only, if you have less than 25,000 invested, you can only trade during intraday. During the same day, you can only go in and out of a trade 3 times in a 5-day period. Or, if you could be investing for the long haul,
Now, when you say 25,000 invested, you mean 25,000 for that stock, or you have 25,000 in your account?
You have to
have available
25,000 in your account available. If you drop below that 25,000, then you are subject to that rule. If you have over $25,000 in the account, which I disagree with this whole thing, but if you have over 25,000 in the account, then you can trade as much as you want. Nobody's going to stop you. But if you have under that, then you only get 3 intraday trades per 5-day period. So if you buy a stock on a Monday morning and you sell it Monday afternoon, that's 1. Tuesday morning you buy, Tuesday afternoon you sell, that's 2. Wednesday morning you buy, Wednesday afternoon you sell, that's 3. So now you're done for the week. You've got to wait 5 days.
So let's say Thursday comes and I say, shit, I want to buy this stock in the morning and I see it goes up in the afternoon. What happens if I try to execute that trade and I've already reached my 3 trade cap for
if you try to execute that trade, then you're going to have a margin call where then what they're going to do is say, we're going to lock down your account until you put $25,000 in it.
Wow.
And if you don't, your account will be locked for 90 days. Now, I disagree with this because I feel that this is part of the whole, retail investor, institutional investor, that fight.
First thing that popped into my head. First thing that popped in my head was that.
Yeah, it's that tug of war, right? They don't want us to get to that level that they're at, so they stop us from doing the things that they do.
And it's right in front of our eyes, and these are the things that they do, and we don't really question.
Right.
We just say, "Oh, well, I need 25,000 in there." But think about who has 25,000 in their account.
Right.
And who's to say because I have $100 in my account that I cannot make 5 trades in and out in a 5-day period and build my account up.
Right. Yeah. The rich get richer.
And the poorer get poorer, or they stay the same.
Yeah. And the poor don't get a fucking thing.
Not a thing. And that's where, again, Stocks is Talking podcast with Ibn Gets. We're here to break through all those walls. We want the masses to be the smart money folks. We're trying to be the smart money folks. Do we fail? Do we lose? Yes. Do we win? Do we succeed? Yes. The point is winning and succeeding to a point where there's nothing anyone can tell me about how to trade my stocks or the education that I have, because then I'm able to pass on that information to my nephews, to my nieces, to my children. This is the whole point. Building generational wealth. And I can get into a whole nother topic. We're going to keep it stocks, but the point is to pass this information down so that everybody comes up. The past you learn from, the present you build on, the future you hit the moon. And that's the whole point. I'm trying to go to the moon. I know Elon Musk wants to go to Mars. I want to touch the moon. And then
one step at a time.
One step at a time. Let me get to the moon first.
Right.
So the whole point of understanding and getting familiar with the kind of trader you are, you definitely don't want to be an emotional trader. You can be a day trader where you're in and out. And again, we've covered, you can only be in and out of a trade same day, 3 times a week, unless you have over 25,000 in your account. Or you have the long-term investor. They just want to buy stocks that they think in the next 5 months to 10 years are going to give them the kind of return on their investment where they'll pull that out and take that money and do something with it.
Right.
Then you have people who are a mixed bag. I'm a mixed bag, and I think you are too, Gets.
I am now.
You are now.
I am now.
love to day trade, get in and out on options or small caps. We're going to get into the small cap discussion, but I also like to jump into new companies that are innovating, like Plug Power, like Snapchat, there's so many innovators.
QuantumScape.
QuantumScape. And what exactly does QuantumScape do? I'm familiar with the company and the name, not familiar with what they provide.
That's solid state batteries. That's a whole next level of batteries for EVs and eVTOLs. For everything, for battery storage. Like there's companies like QuantumScape and Fuel Cell and Plug. The stuff that they're doing next level. It's there's a risk reward. You just got to decide where you stand on it. And we talked about it last time. I am showing proof. I decided to, I decided to take a few risks on some of these things, but for the most part, I am showing proof. And this is all comes back to the trading style. You're investing or you're day trading. You're day trading. You don't care about the fundamentals. You don't care. You don't care where the company's going to be 10 years from now. That matters. That does not matter.
You want to know what they're going to be at 2:00 this afternoon.
Exactly.
And can I get out?
Right. And it's about knowing how to read the charts, which goes back to your research and your Investopedia and stuff like that. You got to know how to read your indicators, how to read your charts. So that's all. That goes back to your research. You rewind if you want to get that. But
go back.
Yeah, but if you want to invest, now you got to look into. You got to actually. That's when you're doing the Google search and doing the investor relations, and you're actually listening to the calls. You're reading the reports, and you're doing all of that because you got to decide long term. Will this company survive? Remember, I was talking about that. Showing proof. I said it on the last pod. Showing proof. There could be a company. It sounds great, but I say showing proof because I say, all right, you got to show me that either your research is sound and I understand it. If I don't understand it, then I'm just not going to invest. We'll just, it is what it is. But, or it's got to be the numbers. You got to show me that there's growth. There's massive growth, which is one of the reasons why Tesla is at where it's at. And we posted about it on social media. Tesla posted their numbers, their delivery numbers. The EV, actually a few of the EV companies posted delivery numbers. And
Tesla,
we threw out there. Tesla, Neo,
I think Tesla performed better than any first quarter they've had when it comes to delivery.
Yeah, I think it was a record.
Production results. A record. Yep.
Yeah.
I gotta say something really quickly. You threw out a nugget in there that I wasn't ready for, but since you threw it out, I gotta touch on it. Follow us on Instagram at ib_gets_podcast. We are live on social media, people. We're not playing with you. We're giving you information on the pod every week. We're giving you weekly information in the social media chats. We're on Facebook. Stocks is Talking Podcast with Ibn Getz. Reach out to us. We're also on Discord. How can they find us on Discord, Getz?
Discord, so you gotta hit us up on social media and we will send you out the invite.
What is Discord?
Discord is a social media platform. You come and you can chat with us. So hit us up on the social media, on the Instagram, on Facebook, and
we'll send you the link.
We'll send you the link.
Invitation only.
Yeah,
invitation only.
We'll send you
our
the link.
Listeners only.
Yeah.
Yep.
We'll send you a link. You come in and you chat with us, and we'll chop it up about all this. Everything we talk about now, we'll talk about it in the Discord and more.
Live and direct.
Exactly.
Live and direct. You getting us while we in the middle of our days, but we see some good news. We ready to talk about it.
Right.
We have something on our mind. We ready to talk about it.
Yeah. Or hit us.
Chat with us.
Or hit us with something that we didn't know.
Hit us with something we didn't know or a topic you want discussed. We'll listen. If you give us some sound direction and something that you really think will be beneficial for you or your child or your sister or your brother, or something you say, you know what, Ibn Getz, y'all didn't talk about this. How dare you be a podcast talking about investments and you didn't hit on this?
Right.
Let us know.
Right.
We're listening. We hear you.
Yeah.
I hated to have cut you off, but I felt like I had to jump in there and give us our socials, give out the socials, because you jumped out there and said hit us on Instagram, or we just posted on IG. We didn't even let the people know we have social media.
Yeah, we out here.
Come on, man.
Yeah.
We out here.
Yeah, ear to the stocks.
Absolutely. Ear to the stocks. Oh, that's some type of sub title for the pod. You all will see that again. You might see that as the title of this episode. We'll see. But I'm gonna go back to, you were talking about the EVs. You were talking about how Tesla recently reported that they had a record delivery results for the first quarter. Anything else you wanted to touch on in that? Because I hated to cut you off, but I had to highlight the socials.
No, it's all good. No, it's just one of those things you got to be looking at. So depending on what your trading style is, once you figure out what you want to do, how you want to invest or trade, and who you want to do that with, whether it's one broker or 5 brokers.
Yep.
Then you know what to do with the information. And that's all we're trying to do, is give you some game on, where you can go and what to do with the information. So Tesla comes out with numbers. If you're a day trader, you should have, it's buy the rumor, sell the news. So you should have been prepared ahead of time. You should have already had your place set up. Because now the news is out. They came out with numbers. So you should be selling, not buying.
And what day did they come out with the numbers? Was that last Thursday?
That was it was, I think it was Thursday.
Wednesday.
It was sometime last week they came out with the numbers. All the EV, it was actually April 1st. It was
April 1st.
Yeah, okay. April 1st. All the companies came out with the numbers. Not just the EVs, but just automotive. Okay. So the numbers came out, and before that, it was, placing bets, what you think was going to happen, but if you're an investor and you thought Tesla was going to come in below the estimates, then you would have waited and hoped that they came in low and that the stock dropped, and then you would buy more.
Yep. As the long-term hold.
As a long-term hold. Because, you look at the overall, depending on because you're going to do your own due diligence. So,
always.
So if you looked at it and you said, Tesla does X, Y, Z, they have all these things that they do, and it's worth so much, you would have looked at it and said, you know what, I'm going to wait, and if the stock drops, then I'm going to start buying. The numbers came out, they beat, so did every other EV company. So maybe you said, all right, I'll stick with what I got. If you're a day trader, then you would have, in the morning, maybe, you look at, I think, even next week, it may still be in play, but you would look at it and say, all right, I'm going to be looking at the volume, and, I'll go from there,
And to that point of volume, we talked about volume early on in the episode. We talked about volume. We talked about 52-week highs and lows. We did not touch on daily highs and lows, but just to bring it all full circle, to your point of buy the rumor, sell the news, day trading and long-term holding, for this very example, you said if you're a long-term investor who's interested in Tesla, you see this news come out, you figure, okay, they just beat, they might take off a little, but then pull back because you buy the rumor, sell the news. Maybe I'll wait to see if they drop a little and purchase and hold for the next couple of years.
Mm-hmm.
Do you want to know what happened to Tesla the day of these? April 1st. April 1st, their daily range was $692 was the high, $659 was the low. Meaning that company jumped up $40 and came back $40 in one day.
Yeah, that's crazy.
So if you're a day trader, you saw the news, you might have jumped in early in the day because you see that it's big news, which means it's going to be high volume, which means high volatility. These are terms we used. I'm going to get in and try to get out. I can guarantee you a lot of day traders, not guarantee, I can assure you and assume that some day traders got in in the morning and got out in the afternoon, and they were in on that stock as it was at 659 and rolled it up to 692 at least.
Right. And
got out and made money that day. Now the stock closed at 661, meaning that it reached $692 at one point, but it ended up selling off because the news came out. So it sold off a bit. So by the end of the day, it closed back down to 661, right. Which is where, if you're a long-term investor, you're probably going to try to get in right around 3:50, 4 o'clock. And I'm known for that. I'm known for waiting until a Friday at about 3:50 to jump in on the stock. Right. So long-term investors jumped in and did that. So with that one stock on that one piece of news of production results, we were able to show you the long-term investment strategy and the day trader strategy and how it worked in one stock, in one sequence.
Yes.
That's a crucial game. Yes. It's important that we talk about these things. And I've got to touch on one thing because I talked about the long-term investors possibly jumping in on a Friday at 3:50. I think it was Thursday because Friday was a holiday for the markets. The point is, and I don't know if you follow this philosophy, Gets. Investors tend to sell off on a Friday because they're profit takers.
Right.
They're not people that are in it for the long term. Some people do intraday. Some people do intra-week, where they're just trading in that week. So come Friday, they're taking their gains and they're getting out. They're taking their ball and going home because they've already won 10 games of 21. So right now, we're gone for the weekend. We'll come back next week. And that's that's a strategy that you can look forward to or possibly include in your tool belt. On a Friday, when a week is ending, if you have your eye on a stock, see what it's doing that Friday. If it starts to pull back in the morning, it's a great chance it can continue to pull back because profit takers are taking their money for the weekend. So what do you do as a long-term investor that's interested in this stock? You want to buy, because in the last episode, what did we talk about, Getz? Buy on the dip, sell at the tip.
Yeah.
People tend to trade off and get their winnings and go home on a Friday because they're called profit takers. They're done. When profit takers take their money, you put yours in, potentially, because now you are capitalizing on the dip.
Yeah, if you've done your due diligence, and
you've done your due diligence,
and you know, and you have your price target where you think what you think the stock is worth. If it's below that number, then, like I said in the last podcast, you should be the point of liquidity. You should be buying. If everybody, if they're selling on Friday and it goes below that number, then you should start buying in. You ain't gotta buy in heavy. You ain't gotta, spend all you got, but you should be buying because you believe in it.
The point of it all is this: at the end of the day, the Stocks is Talking podcast with Ibn Getz. We are not financial advisors. We're not here to tell you what stocks to buy, what stocks to sell. We are simply two guys who love investing. We love talking about investing. At the end of the day, you've got to trade at your own risk. You've always got to do your due diligence and put in the proper research. You've got to always make sure you do what's right for your portfolio. At the end of the day, that's what you have to do. But we've given you some great tips, some great information, shared some great stories. And at this point, I've got to tell you again, follow us on IG at the IB_Getz_podcast. That's IG. Facebook is us. The Stocks is Talking podcast with Ibn Getz. We came, we saw, we conquered, and we allowed you, the listener, to listen in to us engage and exchange information on the stock market. Exchange valuable information that you can pass on. Jump on in.
And we out. That's it.